Welcome back to 7-Minute Options. So I'm going to take a look at the Tesla position that we looked at in the previous episode because we really only focused on the put spread of that Iron Condor because that was the one that was breached last week. But let's take a look at the call side because I think there are some very important adjustments that we can make today and some cool things to look at. So just a refresher, on the Tesla position we have, it's an Iron Condor. We opened it 25 days ago. We have 28 days left on expiration, and it is $10 wide on both sides, so it carries $1,000 risk. And if we look at it on the graph, this is what it looks like. So let me just zoom in a little bit here. So this refers to the date when we opened it, April 26th. This date here is the June 18th expiration. This is my 580 short put, and this is my 890 short call, right? So back in April, Tesla was right in between those strikes. At the time, I thought, hey, look, Tesla bounced off the 570 mark here. It bounced off the 570 mark here again. So when I was here, I thought I felt pretty safe selling the 570, 580 range. I think these both were in the 20 to 25 delta range, both the short call and the short put. And so I sold it. Now the put was challenged about 6 days ago, and now it's making a comeback. But let's focus on the short call and the long call, right? The call spread, because the previous episode we talked only about the put. So let's talk about the call, because today is perfect for rolling this trade. So according to Tom Sosnoff and his buddies over there at Tasty Trade, Tom is my OG. I love the guy. I love Tastyworks. Do watch their videos. They're all over YouTube. There's some really good material on the Tastyworks website and their YouTube channel, so go check them out. But basically, if I look at the call side here, when I sold the Iron Condor, right, I got $1,800 for selling the 890 call to somebody, and I spent $1,702 to buy the 900 long call, right? That's to define the $10 spread. And so if you look at the difference between them, 1702, 1861, I got about $149 if my math is right. Actually, sorry, $159, right? Today, right, here we are 25 days later, and it has completely moved away from the calls. The Tesla stock has moved way down. And today, this call, the 890 call is trading for 72 cents, and the 900 call is trading for 68 cents. In other words, this thing is only worth 4 cents now. So I could buy this back for 4 cents. And the reason why I probably should do something with it is because if I hold it for another 28 days, remember that's $1,000 risk on the upside. If I hold this for another 28 days, I only stand to make $4, right? That's this 4 cents you see here. So at this point, what Tom recommends over at Tasty Trade is, look, you open up an Iron Condor 40, 50, 60 days out, whatever. And when you get to like 30 days, you manage it, you look at it. And when you get to 20 days or 15 days, you close it out. So I'm at 28 days to expiration. I'm right in that window where I want to manage it. And let's take a look at my 890 call. So my 890 call, if I look at that position on the table here for June 18th, this call, you can see that's where the money is, right next to my puts. I mean, this 890 call today is a 2% probability of touch. It's a 2 delta. I mean, 1% chance. I mean, there's like a 98% chance it's never going to get near there. So what a lot of people do here is, look, I'm carrying $1,000 of risk, and I only stand to make $4. It makes no sense for me to hold this. I can either spend $2 or $3, close it out, take that risk away, because there's no point holding it for 28 days when there's really only 2 or 3 more bucks left to make. And then that's one thing to do, and then you don't have to worry about how high Tesla goes if it goes back. And the other thing to consider is, hey, why don't I move it down a little bit, right? I could go back to the 20 delta, right, which was my original risk, and I can collect like another one. So let's say I want to go back to like the 20 delta, and that's what I mean by reestablishing the probability, because we started this Iron Condor at around a 20 delta. I'm just bringing it back to the 20 delta. It's still outside the expected range, right? The expected range is the orange bar. So it's outside the 1 standard deviation move. So let's go down to, let's say the 20 delta at 660. If I sell that and I buy the 670, right, I can pick up another $151. When I do that, I'm like, okay, so where does that put me on the graph? The 660. If I look at the graph, what this does is this would take this 890 short call and move it down here to the 660 between now and the end of sort of middle of June. And that looks kind of tight. Like I don't feel very comfortable. I mean, Tesla can move back up there in a few days and all of a sudden I'm in a tough position there. So when I go back here and what if I move this back, say the 10 delta, what do I get there? So let's go to 710 and 700. I pick up $65. And what does that, how does that look like on the graph? 700, well, it was just there maybe 15, 20 days ago. Do I want to lower my $1,000 risk from here to here for 65 bucks? Some people would make that trade, and I would argue that, that's not a bad move. What I'm going to do is, Tesla is quite volatile. I think it's back on the upswing. I'm actually just going to close this. So I'm going to just spend $3. Actually, yeah. See if this gets filled and just take off that risk. Now, there's a good chance it's not going to get filled. I might have to pay $4 to get it filled. But the point is, if I keep it on there, if Tesla starts moving back, my put credit spread is going to start making money for me. But then as we start getting closer to my short strike, now this position is going to start losing money, and I don't want it to lose money. It's almost run down to zero, so it served its purpose. If I keep it on there and Tesla moves back, it's actually going to fight against me. It's going to take me longer to reach that 50% target I have for this whole Iron Condor position. So this particular one, I'm not going to open a new position. I'm just going to close it. Right now, there's no takers at the 3 cents. It's around 4 cents. I'm going to replace it. I'm going to bump it up to 4 cents. I'm going to see if there's takers for that. And I really wish somebody would buy it. I don't want to spend $5 on this unless I have to, but like, every dollar counts, man. You think, oh, $4, $5, it's only $1, and I hate paying more for this. I hate walking up that ladder for it to get filled, but it's Friday. I don't want to carry this on to over the weekend. In case there's some good news in Tesla, then this thing is going to start fighting against me. So I'm going to just wait a few seconds here, and then I'm going to, let me see how many people are in this. Yeah, the 900 option you can see there, there's a lot of people in that one. Not a whole lot of people in this one, but yeah, I should be able to close this. It's only 4 cents wide on the 890 strike. So let's try to close that out for 5 cents. Come on. And it's closed out. Perfect. So now, if you look at my graph, I can remove this one. And there you go. That's my position now. All I care about is if it starts moving up, my put credit spread is going to start losing money quickly. I'm not going to be fighting the losses with a call credit spread that would have gained value or worked against me as the stock rose. So now I only have one put credit spread to worry about, which is great. So yeah, that's it. That's one way to manage it. And then what I'm going to be looking now to do is wait another maybe 10 days or so. So when this gets to between 20 days and 15 days, I hope that I can close this out for, again, my goal here is to close it out, buy this back for somewhere around 100, yeah, I think 158 bucks was my target, right? Half of the 316. So if I can close it out for 158 bucks total, that'd be great. But the less I pay, the better. So I feel pretty good about this one. Hopefully Tesla doesn't disappoint. Hopefully there's no more bad news. And even if it goes sideways, now I'm just looking at time premium and maybe for it to move back in my favor. All right, that's more than 7 minutes. Anyway, either way. Thanks, guys. See you next time.